to the afternoon session for investing strategies in Bitcoin. My name's Harry. I'm the managing partner at Binary Financial. So first off, I just want to give a shout out to Jason, King, and Mo. Steve Borgard told me to make sure that you guys don't jump into the pool at Versace Mansion this year. And so I want to get a kind of an idea of the audience here. Raise your hands if you've actually traded stocks, options, and currencies. Okay, great. How many of you have actually used platforms such as Interactive Brokers, TD Thinkorswim? Okay, great. Okay, so it looks like half of you kind of have some trading background, some trading experience. Now, I really want to know, for those of you here, raise your hand if you think the price of Bitcoin is important. Okay. Raise your hand if you don't think the price of Bitcoin is important. Okay, you're all liars, okay? Because there's two types of people in this world. There's people who care about the price of Bitcoin and those who lie about it. Okay, there's really two types. So why is the price of Bitcoin actually important? Well, if you look at even traditional markets such as like the oil markets, is the price of oil actually important? Well, absolutely. It's a bellwether for the price of how well the oil industry is doing. So typically valuations of companies are actually also tied directly to the value of this commodity. So absolutely, the price of Bitcoin is very important. And exactly that, so for example, when we talk about investing in Bitcoin, we also talk about investing in the ecosystem. You want to invest in companies, but also invest in the actual Bitcoin itself. So, the valuation of these companies a lot of times is tied directly to the value of Bitcoin. So yes, the price of Bitcoin is important. That's right, I said it. Okay. All right. So for the remainder of this pretty much presentation, I'm pretty much going to give you guys like a primer on kind of trading 101, fundamental analysis, technical analysis. Then we're going to follow up by some references and Q&A. And actually, all the stuff that you're going to see in this presentation is stuff that we actually use professionally as a firm. So with that, without wasting any more time, let's do some trading 101. So topics in trading 101 are going to be about, first off, we're going to determine where's the price of Bitcoin going to go, different ways to trade Bitcoin. I'm going to talk a little bit more about trading terminology, and then finally we're going to talk about trading psychology. So where's the price going to be? Why is this important? Well, a lot of people like to buy high and sell low, or they like to sell low and buy high, so reverse shorting. So if you want to make money, you typically want to have a good idea of where price is going to be before you enter a position and exit a position, right? So how do you actually determine this? Well, you need to do a lot of things such as research, but we personally believe that using a combination of fundamental analysis and technical analysis is critical because it gives you all this information and data points on when you should actually put on a trade and when you need to exit out of a trade. And then also trend following is actually very important. Remember, the trend is your friend until it ends. It's very important. So different ways to actually trade Bitcoin. We're going to talk about this now. So I'm going to talk a little bit about money-making methods. We're going to talk about on-exchange trading. We're going to talk about one of my favorite, which is OTC. We'll talk a little bit about arbitrage. And if you've been to my talks before, I'm adding a new section in here that actually talks about market making. Okay. So ways to make money. So before with Bitcoin, you could only buy low and sell high. This was probably up until about 2 or 3 years ago when Bitfinex was one of the first people that brought in margin trading, which essentially allows you to borrow Bitcoin first, sell it, and then buy it back. So that's called shorting. And then about 2 years ago, the futures market, OKCoin, Huobi, BitMEX, BTC.SX, they created a futures trading platform. So futures is actually also important because it depends on the spot price of actually Bitcoin. So it gives you the ability to actually trade futures by using Bitcoin. And then options is actually in the works. CFTC and LedgerX is actually working on bringing an options platform to institutional traders and hopefully soon to the general public. And that's actually when I think you're really going to see the price of Bitcoin go up, is when you can actually really start doing true dynamic hedging and actual hedging. So on exchange, the beauty of the Bitcoin ecosystem is about 2 to 3 years ago, there's really only 1 or 2 exchanges that you can trade on. Now, we trade on so many different exchanges. So this is actually a very healthy sign that investment is still going into exchanges. So all of these exchanges, you're going to see a couple of new ones here, BTCC, used to be BTC China, and Gemini, from the Winklevoss twins that have come on. So it's very exciting to see all of these developments, coming online as well, and then ItBit, for institutional trading. And then one of my personal favorites is OTC trading. So that's just an example. So for example, I want to buy 100 Bitcoin from somebody in the audience. essentially I'll send you money and then you send me, the Bitcoin. That's considered an OTC trade because that doesn't happen on the exchanges. And why is OTC trading actually important is because it doesn't affect the market prices of Bitcoin. Because if I want to sell 1,000 Bitcoin and I sell it on the markets, it's going to actually potentially move the market. So arbitrage, what's arbitrage? So the definition of arbitrage is the simultaneous buying and selling of the same asset, a commodity or currency in one market or selling it in another. So for example, if I buy Bitcoin for $415 in the US and then I sell it like 20 seconds later or even 5 seconds later in China for $420, then that's considered arbitrage. So the craziest arbitrage I've ever experienced was like we used to buy Bitcoin in Canada about 2-3 years ago for about $800 Canadian, and then like 5 minutes later we would sell it in China for like almost $1,300 US. So like it's crazy, like a $600 spread. Just don't see that. But now that the spreads have actually come down, so you're looking at anywhere between 0.5% to 1%. But when there's periods of high volatility, sometimes the spreads you see like 5 or 10%. So a lot of people know about arbitrage. It's not really like anything new, but it is a very, very interesting phenomenon in Bitcoin because people think that arbitrage is going to go away, but the more exchanges, the more markets that actually open up, the more arbitrage opportunities there actually will be. So, but they're just going to be a lot smaller. So what's market making? So market making is essentially providing liquidity. So what's liquidity? So anytime you guys go to a Bitcoin exchange, somebody has to provide that buy. So they have to provide you the ability to actually buy or sell. So, as market makers, we provide what's called limit orders. So we'll place, let's just say 25 Bitcoin on the buy side at 415, and then we'll put a sell order at 420. And what that actually does is if somebody takes up my 420 order and my 415 order in one trade, I've essentially made $5. This is kind of how market makers make money, and this is called a spread. Now, you typically make a lot less money with market making. However, if you do it enough times in the day, this is kind of where you hear about high frequency trading. This is some of the stuff that we actually do where you have computers and algorithms that essentially trade back and forth all day long. And that's kind of how you make a lot of money. That's one way to make money. So if you're interested in programming, there's a lot of market making programs out there. I highly encourage people to kind of get into it because market making is a good function. It provides liquidity for the market. Okay, some terminology when you're trading. There's really only a couple things that you need to know about trading. When you hear traders talk about bid, they're basically referring to an offer, buy, or going long. And then when we're selling, it's either an ask, sell, or going short. Okay, so trader psychology. Why is trader psychology important? Well, because when you're trading, it's kind of like a game. There's another human on the other side, right? So you need to outsmart the other human. It's kind of like poker, right? What's some very, very important things to learn when you're trading? Now, this applies to not just Bitcoin, but everything that you're trading in general. Cut losses quickly, let your profits run, and always have an exit strategy. How many times have you guys actually traded where you let your profits run but you never sell, or you're like, oh my god, I'm down 10%, I gotta get out. Well, why don't you switch it around? Why don't you sell when you're 10% up, and sell when you're 10% up and get out when you're 1% down? Doesn't that sound much better? So cut your losses quickly, let your profits run, and always have an exit. And then as traders, we also came up with this acronym, ATP, always take profits, because profits that you take today may not be there tomorrow. So if you see an opportunity to make 1% or 0.5% or 2 or 3%, take it. And ATB, always be trading. I'm always doing this, so my friends that know me really, really well know that I'm always trading. It takes 10,000 hours for you to become proficient at something. So that's about 8 hours a day, 40 hours a week for about 4 years. So if you do 18 hours a day with Bitcoin, you'll be a master in about 3 or 4 years. So that's just kind of to give you an idea. And you guys might have heard this phrase from Wall Street, the movie. Bulls make money, bears make money, but pigs get slaughtered. Don't pig out, because pigging out means you're greedy, right? So bulls make money. Well, when the market goes up, you can make money. When the market goes down, you can make money short. But anytime you get greedy, guess what? You're going to get slaughtered. So always take your profits. Very, very important. One of the things that I teach. Okay, let's talk about fundamental analysis. What is fundamental analysis? So fundamental analysis is primarily the study of news events and macro events. And we use a lot of different news sites. But what was my favorite news event? Like the last two times, like since August and even now, was really, the whiny rage rant from Mike Hearn. He created lots of volatility in the market. Thank you very much. And, that created like 20 different trading opportunities. So as traders, When we're short Bitcoin, we think it's going to fail, but when we're long Bitcoin, we love Bitcoin. So that's kind of the trader mentality. So fundamental news is actually very, very important because I'm going to talk about technical analysis. It doesn't matter how much technical analysis you follow. If there's going to be a major event that actually happens, it will affect the price. So I'll give you an example. Even when China came out and said that, look, we're potentially not going to allow the banks to deal with Bitcoin, that caused a huge market correction. So it's very, very important to pay attention to news, especially in the Bitcoin space. So now we're going to talk about technical analysis and charting. This is going to be the last section. I'm just going through really fast because Mo only gave me 20 minutes. So what is technical analysis? What are the tools that we actually use when we're trading on the technical side? We're going to talk a little bit about different types of charts and data, technical indicators, and then we're also going to talk about chart patterns. So what is technical analysis? So technical analysis is actually the study of charts and patterns to determine where the price of something may go. And you might have heard this phrase, past performance is not indicative of future returns, but in technical trading, we like to say past performance gives you a better indicator of how something may actually perform. And this leads me to my next point, which is what's called a self-fulfilling prophecy. So a self-fulfilling prophecy is an event that actually happens because other events actually cause a snowball effect to cause it to actually happen. So for example, if I see traders piling into a position and I see volume actually increasing, I'll scale into this position. And then when I scale into this other position, it creates other data points that people will actually follow and take a look at. And then they'll start piling in. This actually causes the price to move in any direction. So technical analysis is used by a lot of traders. This is very, very important to know. So what are some of the tools that we actually use in software? Well, we use RTBTC, which is actually one of the oldest trading platforms out there. It provides excellent charts. I highly recommend it. It's free now. ZeroBlock actually bought them. We also use Bitcoin Wisdom, BFX Data, and CryptoWatch. And I also always recommend notifications for pricing because you're not always going to be in front of a computer, so you want to make sure that if you're actually trading, you always know where the price is. So that's ZeroBlock, the software. That's Bitcoin Wisdom. That's CryptoWatch. That's BFX Data. Now, I like BFX Data because BFX Data also gives you some additional data points, such as margin lending. So, for example, if the interest rates are actually going up when you're borrowing Bitcoin, borrowing USD, that's usually a bullish indicator. And when the interest rates drop, this is kind of the amazing thing about the Bitcoin ecosystem. You're starting to see a lot of these different things that traders actually use to make decisions when trading. And then tools. So if you actually notice, hardware is very important. So if you notice, I have this Apple Watch. So people actually ask me why I got an Apple Watch, and it was really just to show me the price of Bitcoin. That's it. That's the only reason I have an Apple Watch. Okay, but it's great because I look at my watch about 300 times a day. So it's just like, okay, what's the price of Bitcoin? And then if you're going to have good tools, you're going to see a trade. This is one of the trader workstations. I actually have that at home. It's 8 screens because it's faster to look than it is to alt-tab. Okay. And then if you really, really want to see, that's our office that we actually trade out of. So we have about, I think, 10 televisions and about 20 screens because it's cheaper to it's faster just to look. Okay, so let's talk about the different types of charts and data. I'm going to show you the Bitcoin price chart, visual depth chart, and then the time and sales. So this is a Bitcoin price chart. This has 4 different time periods. One is the hourly, the 15-minute hourly, the daily, and the weekly. And these are all very, very important. Okay, technical indicators. I'm going to go through the 5 most important technical indicators that I think every single person that trades Bitcoin should be using. Candlesticks, volume indicator, exponential moving average, stochastic, and relative strength index. I know this looks like it's a lot of stuff, but this is about as simple as it gets for you to become trading. And usually the videos will be posted online. If you guys want to copy the slide deck afterwards, just message me. So candlesticks. What's important about candlesticks? When the candlestick is green, it means that time period was all buying. When it's red, it means it was all selling in that period. Volume indicator is actually at the bottom. Volume indicator is actually very, very important because if you're going to go long or short, you want to really, really do it when there's a lot more volume. Otherwise, when there's not a lot of volume, typically the pattern is very, very sideways. And sideways action, as you'll see with charts, just basically means there's not a lot of action going on. Exponential moving averages, I kind of like this one. This is a lagging indicator. It just means that when the yellow line is above the purple line, more people are buying, and when the yellow line is below the purple line, more people are selling. So it's good to know, right? Very easy. And then stochastic, this is like a momentum indicator. So the momentum indicator, when it's at the top, just means that it's more buying. And then when the momentum indicator is down, it just means there's more selling. And then the relative strength index, this is also a very, very important one, especially if you're doing day trading, because anytime something is overbought or oversold, it's going to correct. So for example, yesterday, the price was at what, 380, and then all of a sudden it shot up, to 428. Guess what? That's way overbought. It's going to correct. But everybody just seems to think it's going to go to the moon. No, that's not how trading works. Because there's people like us out there that know that you all think like this. So we're going to sell into it. So when we sell into it, guess what? It pulls back 5%. So it's going to correct. And then when it corrects, buy the dip. That's what we actually recommend. Okay, chart patterns. I'm going to finish off the chart patterns. There's 4 entertaining chart patterns I think you need to know about in Bitcoin if you really, really want to make money. First one is everybody's favorite, the parabolic, where the price goes straight up and then it comes straight down. That's probably, this wasn't the China move, this was probably like a 9x move up, which basically means if you bought in Bitcoin here and you sold it, actually 13x, if you bought in Bitcoin at $100, it went all the way up to about 1,300, and then it came crashing straight down to about 400. So this was a pretty crazy time in 2013, 2014. And then the dead cat bounce, I don't know why they call it dead cat bounce, but essentially what happens is you put, a good example of a dead cat bounce was actually when Bitcoin XT was actually forked. We set a bunch of limit orders on Bitfinex at about 160, and we actually got filled at 160 on Bitfinex because people panic and they take out the entire order book, and then it crashes all the way down and then it bounces back up. So typically on a dead cat bounce, you can make almost 10 to 15% on a single trade. And that's when Bitcoin moves 25% in a single day. Sideways action, so sideways action, it's like a trader's nightmare. So for example, about a week and a half ago, the price was sitting at around 430 to 420. At one point it was at 425 to 430, and it didn't move for about a week. And everybody says, oh, Bitcoin's like, mature, it's like so stable now. And then boom, the price went up to 440. So it's very, very important to understand this pattern because it's almost kind of like a spring being wound up. Anytime there's a huge sideways action, there's going to be a big move up or down. Just understand this. And then this is not really a chart pattern, but we always kind of like to show this because the bull bear whale chart is, when somebody on Bitstamp that year, I think it was November of 2014, he wanted to sell about 30,000 Bitcoin, and he just put it a limit order at 300. And essentially everybody ate through this, and by morning it was like, the price was at 330. So it's very, very important to understand whenever there's a big, this is like called amateur, like guy had a lot of money, but nobody ever flashes size like this. This is kind of like a one-time phenomenon. It's like spotting like I don't know, what is that? Like what is like a Sasquatch? Like it almost like never happens. Right? It's like Sasquatch. We should call it Sasquatch. Okay, so references. Like I said, Bitcoin Wisdom, Zero Block, CoinDesk, one of my favorite publications. Pete's here. Pete does a lot of great job covering the news. And BFX Data. And then a couple of good books to read. My friend, he's an author, Trend Following from Michael Covell, and then Trader Psychology, trading for a living, psychology of trading, tactics, and money management. And then finally, who are we? So we're Binary Financial. We're a US-based hedge fund. We do a lot of electronic market making, electronic trading, prop trading. We're most known for our brokerage for high net worth clients and institutions. So if somebody wants to move like $5 million worth of Bitcoin, they give us a call, or they want to sell. We're a trusted counterparty, and we've done some investments. So one of the investments we made is actually Bitfinex, one of the top miners. And then that's my contact info, if you guys want to reach me, any Q&A. And then I always like to put a picture of Mo and myself every time I do this conference. And actually, Mo, this is your 3rd year now, right? In Miami. So, this is actually my favorite conference to always come to and speak at because it's at the beginning of the year. It's a great way to kind of kick things off. So I think everybody will give Mo a round of applause for the conference. And that's it.